Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, we're here. That 381 level on the SPY that we've been talking about for months was reached on Friday. So now what? Where do we go from here? Lots to talk about in this recording. In addition to, you asked for it, we're going to apply our Elliott Wave analysis to Bitcoin in this recording as well. So let's get to the chart. At the time of this recording, it is late on Saturday evening, so the futures market isn't open. So let's get right to the charts. And there we are, right at the 381 level that we've been talking about for months. In fact, the market closed right at 381.26 on Friday. Many had doubted that we'd make it there, but here we are. So where do we go from here? Well, before I get to that, I did want to refer back to our previous recording where we talked about the January effect. And one of the aspects of the January effect is that small caps tend to outperform in the month of January. And so far, this January, that's been true. Here's a chart of the Russell, the IWM, and you can see here on the 6th of January, the Russell was up over 4% just on that one day, and it's continued higher from there. Going back to the SPY, we haven't even moved 4% total since the 6th of January. So there's the outperformance. All right, why didn't the market go to the downside when the Republicans lost both of those runoff elections in Georgia? We had talked about how, historically, the market doesn't like it when one party controls everything, the presidency, the House, and the Senate. Well, another part of the fact that the Democrats control everything now is that we're likely to get a much larger stimulus package than we would have gotten if the Republicans maintained control of the Senate. So that extra stimulus money is probably going to move into the markets and could push us all the way up to this 161.8% fib level extension at 420. So as far as the correction, say just wait for it. I think that if we reach that 420 level, we could get a pretty significant move to the downside then. All right, so what else happened? Gold and silver tanked on Friday. Why? There's the chart of gold. Big move to the downside in gold. That's the GLD. Same thing in silver, the SLV. Both made significant moves to the downside. Well, we've been talking about this 210 spread for quite a while as far as interest rates and the fact that the widening of the spread made it easier for financials to make money. But it went parabolic when the Republicans lost both of those runoffs as interest rates jumped significantly to the upside. That's another thing that's affecting gold and silver in addition to the dollar. We came down here, got within 20 basis points of that exact, and you can argue with exact points that you draw the lines, but within 20 basis points of this C wave extension, which also happens to be the end of the wave 3 on the larger Elliott Wave 5 wave pattern, the dollar's due for a bounce. There's the forecast wave 4. It is not labeled that we're in a wave 4 yet, but see that we had a doji here on the 6th of January hitting a low of 89.17, so right around our target price. The dollar could catch a bid for a while and move back to the upside. Well, that's not going to make it a great environment for gold and silver to go higher in that scenario as well. In addition, we had a really bad jobs report on Friday. So it was just kind of a perfect storm of events that occurred that hit gold and silver. Some of you have been asking to look at oil. If you've been to the gas pump lately, you know that oil prices are going up, and that's not fun. You can see this movement to the upside here. It looks pretty strong. You can see by the DMI, the ADX is outside the positive directional indicator, but it hasn't reached 40 yet. So if that positive directional indicator continues to move to the upside, we could go a little bit higher in oil before we have a little bit of a pause. Just a tiny bit overbought from the 10-day moving average, but not enough. Oil could continue to go to the upside at the beginning of the week if it wanted to. The other thing I wanted to look at is Bitcoin. You guys have been asking about Bitcoin for quite a while. Another factor in why gold and silver moved to the downside, not just on Friday, but the previous 2 days were a little suspect for gold and silver as well. Bitcoin's going parabolic. It's everywhere on the financial networks, and there's speculation that a lot of people might have been taking money out of gold. and moving it into Bitcoin. So here you can see on the chart of Bitcoin, it's in a very strong wave 3. If you've heard any of my recordings, however, you know I don't like these vertical moves. What goes straight up quite often comes straight back down. Here's the DMI. Look at the ADX. Now that is the illustration of overbought on Bitcoin, at least currently. And let's take a look at the weekly chart. There you can see pretty clearly how vertical the move has gone in Bitcoin just in the last, this is the weekly chart now, not the monthly chart. Again, pretty overextended with the DMI and the ADX, and overbought as evidenced by its distance from the closing price to the 10-day moving average, and a little bit of a gap there. Now, am I trying to say that the move in Bitcoin is over with? No, I'm not saying that at all. In fact, I think that this target up here on the wave 5 to around 52,000 is likely going to be hit in the not too distant future. All I'm saying is that Bitcoin really needs to rest, and a little bit of backing and filling would be positive as far as building a base for it to continue to move to the upside. So maybe a pause, maybe a slight move down, that backing filling that I mentioned, all would be very positive for Bitcoin at this point in time. But no doubt, a very strong move. And last but not least, let's finish with the VIX, as we always do. And you can see here that the VIX has come back to the downside following that volatility with the elections, etc. Probably pretty surprising to see the VIX down this far with everything that's been going on. I don't want to get into the stuff that occurred in Washington, etc. Everybody's familiar with that. Might be surprised that that didn't create a whole lot more volatility in the market. The key is going to be, can we get back down to this 20 level again? And if we do we break it this time as we thought we would during the Santa Claus rally, or at least towards the end of December heading into the new year? So lots of stuff going on. In the next recording, we're going to talk about the sector rotation that could occur with the fact that we have a blue sweep now, if you will. So I'll pose you this question. Where do you think the market goes in the next couple of weeks? Do we continue up to that 420 level, or do you think the correction comes sooner rather than later? Post a comment, let me know. Also, while you're at it, please don't forget to hit that like button or hit subscribe. That way you'll be notified every time a new video is posted. One thing I can say is I expected more volatility in January. We've been talking about that, and so far we've got it. So hope everybody's doing well. Had a great start to the year. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.